Do you know what are the key questions you should ask your loan officer when applying for a loan? This week, we discuss loans and the loan application process with Don Heyliger, Credit and Human Resource Manager at the FND Credit Union, St. Kitts and Nevis. Don, we're going to talk about loan. This is very prevalent within financial institutions. Now, I know that the loan application process, it differs from financial institution to institution. But what are some of the basic steps?
The first step is the interview, and that is the most critical part of the entire process, because that's where I find out what it is you're actually looking for. And there might be some needs that you don't even know you had that we can pick up at that point in time. The second thing would be all the collection of documentation. And then the third is the credit history. And the fourth would be decision making.
Okay. So no matter which institution, these are the steps that an individual will go through when applying for a loan.
Exactly, correct. So it's easier for you if you walk with the documents that we're going to need. It kind of shortens the process. Instead of you come, we have to send you back to collect other things. So when you're making the appointment, ask at that point in time, what all documents do I need to walk with? So it works better for you at that point.
What do financial institutions look for when they're determining whether an individual qualifies or will qualify for a loan?
We look for several factors, but for the purpose of this interview, we will focus on the 5 C's of credit. The first one would be your capacity. Can you actually afford the loan and all the related costs associated with its loan? The other one would be your capital. What have you bought, purchased? What are your assets, liabilities at this point? Your capital. Your collateral, what it is that is being offered as collateral, if any, because there are some loans that don't require any collateral. The other one would be your credit history. How have you been paying loans previously? And finally, and most importantly actually, is your character. What do we know about you? What have you done in terms of, in as much as the credit history speaks to your financial obligations in lending, your character speaks to, have you been paying your rent on time? Have you been paying your utility bills on time? And stuff like that, that really focus on who you are.
Yeah, and about how responsible you will be in terms of repaying that loan.
Exactly, correct.
Now, having been considered, the bank or the financial institution has done its check, the 5 C's of credit, you look really great. Having now been considered for the loan, what questions an individual, when they sit down for this interview, what questions should the individual ask the loans officer?
What is the monthly payment? Because that determines where we go from there. Because if the monthly payment is something that is way beyond what you personally can afford, then the interview basically is ending there. Or we sit with you and find out what can we do to make it affordable for you. So it's not a no. So some no's translate into yeses, but maybe not today. The other thing they can ask about is the terms and conditions. How many years? Can we then stretch it for some more years? Can they negotiate their interest rate? That is yes and a no, because that is going to be dependent on so many factors for you to get an interest rate better than what the institution is actually offering or what's listed on their website. So some things that you can bring to bear is, say for instance, you're purchasing a house and the house is $1 million home, but you only want to borrow $200,000. That gives the bank or the financial institution a lot of equity. So you have some space to say, the risk is rather low. Can I get a better deal? The other thing is, suppose you're working somewhere that there are other persons who can benefit from loans and your referral could be very, very profitable to the institution. Another thing would be if you can, or if you're working somewhere and there is collateral that you can bring in terms of other persons to the institution for loans, for deposit accounts, for different products and services, because you have that strength that you're coming with. That's a piece that can be negotiable.
So you mentioned something very important about negotiating for a better rate. really individuals can, so like the bank or the financial institution says, we're offering loans at 8%. You go in, you can say, well, hey, I think you can do something better for me. People can actually negotiate on that level.
Of course you can. You may not always succeed,
Okay.
but you can in fact ask, and there's nothing that stops anybody from asking. The answer at the end of the day might be yes, but if you didn't ask, you would never have gotten it. So you have to ask.
Okay, that's interesting. Now, loan agreements, they contain clauses called covenants. And I know these covenants can be either restrictive or protective. Explain the difference, please.
A restrictive covenant limits what the borrower can do, and a protective covenant, what you must agree to. So take, for example, a restrictive covenant would be, I cannot rent or lease my house. I cannot rent or lease my vehicle, because that loan was granted as a personal and not as a business entity. If it's a business entity, then that's the covenants would then be different. But in most instances, we are talking about individuals. Now, in terms of the protective, those are things that you have no choice. You have to insure the property. You have to insure your vehicle. You have to have life insurance, stuff like that. However, as much as they are protective to the institution, they also protect you. Because if something happens and, an unfortunate incident where one of the persons dies, at least that insurance company will pay the loan, and the loved ones behind can be left in a better space, and they're not struggling if that had not been put into place to meet these obligations.
We know sometimes the loan application process, it happens sometimes quickly, sometimes it's slowly, but you're given these documents. One of them would be the covenant. Long documents, sometimes very small prints with all the details, but people do not take the time to read the sign. How important it is for an individual to actually go through these documents?
Extremely important. You must always read a document. And if you're not sure, carry it to a friend, carry it to a lawyer, and have them explain to you exactly what it is you are signing up to. Because one of the covenants that a lot of persons are not aware of is the non-ability to repay a loan. So if I suddenly win the lotto and I have this huge mortgage, I cannot waltz in the bank with my nice check and say, I'm paying it off. Yes, you can, but there are penalties. So that's one of the little things that most persons are not aware of. And in most instances, it may not, come to pass that it affects them, but at least you need to know what all is in there, and so that you can then be prepared. Because one of them is also that you must pay your life insurance. So if you think, most people think, okay, I've insured at the onset, and when it comes up again, because I can't afford it, I let it lapse. But that's against, because the institution can actually call the loan because you've broken the covenants that are governing this loan.
Very important to go through these fine prints.
Very important, and they're not fine.
And you mentioned take it to a friend. So you are allowed to take the document from the financial institution, go away with it, read it, peruse it, and then come back.
Yes, yes, you can. Because most of them have a date, because you're accepting the terms and conditions, and they give you a date. It normally is about 2 weeks for you to peruse this document and sign it and bring it back. And once that is signed, then the loan process then follows.
Okay, so an individual doesn't have the need to feel pressure that I have to sign it right there at that point when I'm speaking with the loans officer.
No,
I can
you
take it to my friend, family, you mentioned even a lawyer, to get a better understanding of what you're actually signing up for.
Exactly, because that is, especially in terms of a mortgage, that is the biggest commitment you're going to make, other than marriage, of course. But it is one of the biggest commitments you're going to make, and in some instances it lasts longer than a marriage.
Dawn, what are some of the broad categories of loans financial institutions offer to customers?
Biggest one would be residential mortgage or investor mortgage if you want to do some business, apartments, etc. Land loans, automobile loans, consumer, in terms of durable consumer goods, vacation back to school. There are so many categories. But those are the major requests that we see coming forward, and those are the major projects that are available in most financial institutions.
Okay. And of course, the interest rates vary for these different categories.
Yes, mortgage rates obviously would be the lowest, and consumer back to school, those would be at the higher rates because they tend to be smaller loans in any case.
Dawn, now having been approved for a loan, and we know depending on the type of loan, it's a very, it's a big undertaking. Having been approved, what are the responsibilities of the individual?
To repay. That's the short answer. Based on the covenants that you had, those are the letter that you were given with all of the terms and conditions of your loan. You need to follow and adhere to those. Your payments are due on the 25th of every month. Ensure that the funds are in your account prior to that, so that if the 25th is a Saturday or a Sunday or whatever it is, that your funds are in, so that we don't have to be calling you and following up with you. The other thing is, if there are insurance requirements, make sure that they are up to date. Make sure that the land and house tax are paid. Make sure that your vehicle is insured for the following year. Make sure your driver's license is insured. So there are all of these little nuances that we sometimes take for granted that are important in ensuring that your credit history at whatever financial institution you're at stays clean.
People sometimes fall on hard times. At the time when you applied for a loan, your financial situation was comfortable, but along the way you fall, into some challenges, some difficulties, and you're not able to make your payments. You're not able to meet your obligations. Is there any recourse for an individual in that situation?
Come and speak to us. That is the most important. I've told people over the years, have granted loans too. Anytime you have a problem, call me. Because if you don't, then we just consider you a little worthless. Mm-hmm. So that's not the image that you want us to have of you. So if there's any problem, there is loss of job, health, anything, death, anything in the family, anything in your circumstances, come sit down and speak to us, because we are the ones who granted you the loan in the first place. So we need to know. So there are things that we can do that could, smooth those waters for you. Now, say for example, your payments were $1,000 a month, but based on your present circumstances, you cannot afford that. We can sit with you and say, maybe the payments can be moved to $750. The loan would then be stretched for a longer period of time, but at least you are making the payments, you are staying current. And when your circumstances change, and they may or may not, then you can come back in and say, you know what, put my payments back to the original because I want to finish this loan within the allotted time. So there are things that we can do, but you need to tell us. If we don't know, then you're getting the letters, you're getting the texts, you're getting the phone calls, which doesn't help any one of us. So first and foremost, come, sit down, talk to us.
Right. So difficult situations don't mean that all is lost. It's just to come and have a conversation.
Exactly. And it also goes when we do our credit checks, because there's a negative credit history out there that can be explained away, because then you actually finish the loan on time. So it's all about communication.
Mm-hmm. And good relationship with your banker. Exactly. Or your financial institution.
Exactly. That is all we ask for. We help you, you help us. We both win at the end of the day.
Dawn, thank you very much for speaking with us on ECCB Connects.
Chamalani, it was a pleasure.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
Saka fet. Non mwen se Mary Popo, ek mwen ka travay à the Secretariat Caribbean Association of Banks. Fais l'habitude pour sauver l'argent, comme ça ou commencer travail. Ça c'est seule manière pour qu'il s'ajouit vieillesse manière ouvrir.
To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube or Facebook at ECCB Connects.
Here's where we end this week's episode of ECCB Connects. Remember to like us on Facebook and subscribe to our YouTube channel. Join us again next week when we'll be back with another program.